sign-up form there. You can sign up and share your solutions with me, and I'd be happy to have a one-on-one conversation with you about them in the future. So now that we've talked about solutions for aspiring entrepreneurs, so how to ideate, let's talk a little bit about money. Let's talk about funding opportunities for entrepreneurs and for small businesses. So I got a little out of order. Here we go. Let's talk about the first funding opportunity for entrepreneurs, which is bootstrapping. And bootstrapping, simply put, is funding the business without the use of outside capital. So if you are starting a business, starting a new business, most people will bootstrap to a certain point, and then either because of the market opportunity or viability, or because they're just no longer able to, because of real world impact, they're just no longer able to afford to grow the business themselves, they look for capital elsewhere. So most people start off bootstrapping, but some have decided, some entrepreneurs decide that bootstrapping is how they want to grow their business over time. Now, the positive thing about bootstrapping is you get to keep as much of the equity in your company as you want to keep. So if you're a single founder, or if you're a founder and a co-founder, if you have a small team, you will get to keep as much equity in the business as you want, because you're not going to be giving it out to people or trading it with people for potential funding opportunities. If you're going to bootstrap your business, you have to start out with a way to get to building out a product that doesn't cost an incredibly large amount of money, unless you are independently wealthy and can afford to completely fund a significant product development process. So in bootstrapping, you always have to have an eye on how can I be most efficient with the funds that I have, and how can I also potentially set aside some funding along the way for business costs and for even rainy day costs that maybe I didn't anticipate. So bootstrapping is something that really gives you a unique opportunity to hold a significant portion, again, of the equity in your business. It gives you an opportunity to build a business that's going to be lean. It gives you an opportunity to build products and iterate quickly, but it's also something that, depending on how you want to scale the business, it's something that could potentially cause you to be limited in terms of how large you can grow the business, because you're constantly getting money, investing it right back into the business to pay costs, versus getting money to invest it into marketing or into increased distribution or into other things. So this is the first funding option that's available for entrepreneurs. The second funding option here is friends and family. So funding for your business from your personal network. So this is a round of funding that usually happens after someone has started bootstrapping their business. They say, okay, I bootstrapped the business, I've got it to this point, but now in order to get it to the point that I want to get it to, usually it's in order to build out a prototype or do a first run of whatever the product is that you're building, or whatever, or to do a first run of whatever the service is. I need to go out to some people who believe in me, some people who will invest in me, some people who know me and who know that the product that I'm going to deliver is going to be great, without me having to prove it to them in the same way that I might have to prove it to an investor who doesn't know me. So friends and family, you go to your friends and family and you get either a loan or an investment from them, and funding from your business and personal network, again, depending on your network, can cover a significant amount of costs for product development, costs to get you to an initial point where you can begin to scale your business to a point where you can be attractive to banks, angel investors, and even venture capital firms. So next is friends and family. third funding option available for entrepreneurs is loans. So there's a lot of options here with loans, and as with personal loans, business loans can get tricky. Interest rates can be high. There's a lot of opportunity here, and there are some things that are really good, that can be really good options for businesses and really good options for entrepreneurs. However, I always have to say, with loans, when you're taking out a loan, definitely make sure that you know as much as you can about the bank or the institution that you're getting the loan from, and then make sure that you do all of your homework to ensure that you get the best deal possible. So first option, and these are kind of broad buckets of loans, is the traditional bank or a line of credit. So you can go to a bank, one of the major banks or even a smaller community bank, a CDFI, and go and get a bank loan based on the business credit and or your personal credit. That bank loan will have an interest rate assigned to it. Interest rates right now are still fairly low, although the Fed just raised interest rates not too long ago. Still fairly low for traditional bank loans. That is an option for entrepreneurs. However, as with personal loans, if you want to go and get a traditional bank loan, you have to be able to show the bank that you are creditworthy in some way. So you can either get a loan or you can get a line of credit. For the loan, you're going to be charged interest on the entire thing. For the line of credit, you'll just be charged interest for the amount of the credit that you're using at any one given time. So that's kind of the first big bucket, traditional bank loans and lines of credit. The second is online banks. So there's a lot of online financial institutions who have quote-unquote startup loans. So loans for small businesses, loans for startups, loans for a lot of the time younger entrepreneurs who can't show creditworthiness to a bank in the same way that older, more established businesses or older, more established entrepreneurs may be able to show. Now, with an online bank, generally speaking, the interest rates are going to be higher. However, with the ability to be able to fund folks that are a little less creditworthy versus a traditional bank, the online banks, may be an option for you. Now, especially with these online banks, some of them have been accused of predatory practices in the past, just like payday lenders with your personal banking. So again, you're going to want to be careful with online banks. However, they definitely are an option for you. The next is SBA or other government-backed loans. So these are loans that you can get that are backed by the U.S. government. And so that means that the U.S. government isn't going to loan you money, but it does mean that the U.S. government will back. So it'll provide backing to a traditional bank, and sometimes even a smaller community bank or an online bank. It'll provide the backing necessary so that that bank can loan out money at either a lower rate or loan out money to people who don't have, again, the traditional credit profile that traditional banks are looking for. SBA loans and other government loans are definitely great options if you're looking for a loan for your business, and definitely encourage you to check those out as you go about the process of figuring out what the best financing option is going to be for your business. The fourth option here is personal loan. It kind of is what it sounds like. A personal loan is a loan directly to you based on your credit worthiness as a person that's perhaps had a prior relationship with the bank, a prior relationship with the institution, and someone that, again, can show credit worthiness. So personal loans are something that you can do, especially earlier on in the process. And then the last option in terms of loans is financing. So if you are in a business that requires a significant amount of equipment, you can get your equipment financed through a bank, a community bank, an online bank, etc. Also, if you are if you are an entrepreneur, if your business has purchase orders, at times, if you've established a relationship with a bank or another institution, they will allow you to get money, to get a loan based off purchase orders or based off future business with some kind of guarantee or some kind of increase for them. And so financing is kind of the last big option underneath loans. And definitely I know some questions are coming in, and definitely looking forward to responding to those questions after I run through these financing options really quickly. Okay, so the next financing option is crowdfunding. So crowdfunding has definitely become really popular over the past few years. There's two kind of big buckets in terms of crowdfunding. There's rewards-based crowdfunding, Kickstarter, Indiegogo, etc. And then there's equity-based crowdfunding, something like Seed Invest and several other equity-based crowdfunding opportunity sites. The big difference between rewards-based and equity-based is that rewards-based crowdfunding sites are going to give investors, quote unquote, a return in product. So there's going to be some kind of promise for product or a t-shirt or a CD or a mug or some kind of reward that comes to an investor, and you have to use investor kind of in the broadest sense of the term because there's no actual investment made in the company. It's just more so akin to exchanging the money for whatever the reward is going to be. So there's reward-based crowdfunding, and then there's also equity crowdfunding. So with equity crowdfunding, you can always invest in a business, and with some of the sites you can invest as little as $100 and get a percentage of the company, just like a venture capitalist would, just like an angel investor would. You can do that, and the businesses will get the funding, and then you in turn, instead of getting a reward, so instead of getting a t-shirt or instead of getting the new product when it comes out, you'll get a percentage of the company, and you'll get a return on that investment, a monetary return, if that company ends up raising money and being successful over time. So those are the two types of crowdfunding, and I know I usually get significant amount of crowdfunding questions, and so looking forward to responding to those. The big thing with crowdfunding is this: like many things, you get out of it what you put into it. I know for many entrepreneurs, for many small businesses that are doing crowdfunding, whether it's reward-based or equity-based, they'll actually go out and hire a marketing person, or they'll staff up, or they'll hire a PR agency to run or to help run the crowdfunding campaign for them, because it's really about taking your network, activating them, getting that network to then share the funding opportunity, to share the investment opportunity with their network, and then growing from there. You're going to pull in people from the sites just because of the amount of traffic that a site like Kickstarter might get, or a site like Seed Invest might get. There's, of course, many other crowdfunding sites outside of those two. However, it's really going to be about your ability to activate your network and get your network to come out and support your business, get them to share the business, get them to invest in the business. So the next option for entrepreneurs in terms of financing is angel investing. And angel investors, generally speaking, are going to invest anywhere from $25K up to $100K individually, although there's certainly much smaller investments than that angel investors make, and there's certainly much larger investments that angel investors will make. The two kind of categories with angel investors are individuals, so literally a person who is a high net worth individual who has been accredited by the SEC as an investor, so someone that can invest his or her own money directly into businesses. You'll have individuals that you'll deal with, and then you also have syndicates or angel investing groups that'll pool their money together. And so angel investing groups can do 250 all the way up to 750 and even more sometimes in terms of the amount of money that they'll raise for a particular business. So with angel investing, you are going to be married to the investor, and depending on how you work out your term sheet, so depending on how you decide what the variables are going to be, what the to-dos are going to be, depending on what the contingencies are in terms of getting the funding, this person may want to be on your board, they may want to be a board observer, they may want to have a significant role in the early part of developing your business. Now, generally speaking, angel investors will come in earlier on in your business development cycle, so they don't want to, for the most part, invest in something that's just an idea at this point. So they're not going to be where friends and families are. They're going to want to see some kind of product or see some kind of service. They're going to see some kind of traction that you can show, but they're also not going to be investing the significant amount of money that a venture capital firm might be investing into your business. And so angel investors will come in a little bit earlier. They'll want to see some traction in your business, and it's also important to, with angel investors and with VCs, to make sure that whoever you're working with potentially not only has a good personality that you can work with, but also has some business expertise, especially if they're going to want a board position or something else notable with your business. And the last kind of large group in terms of financing options is venture capital. It's high growth, high risk. Venture capital firms will usually come in after you've gone through bootstrapping, after you've gone through loans, although you can get loans at every stage of the business, after you've gone through an angel investor for a round of funding, after you've done a crowdfunding campaign, after you've shown that you have significant traction with your business and you're ready to scale significantly, you can come in with a venture capitalist and get significant amounts of funds. Now, I want to remind you of what I said earlier. Every idea, every business, large or small, is important, it's critical, and I want every person here to want to grow their business over time. Some of you may not want to get to venture capital. Some of you may want to grow businesses that give you a good life and give your family a good life that would never require anything more than bootstrapping, friends and family, and maybe a loan or a line of credit. And that's completely fine. We need everyone. Again, we need diversity. We need large businesses. We need small businesses. So, Shark Tank and The Profit and other shows have made venture capital really sexy. It's made angel investing really sexy and really interesting. However, if you're not a person that's interested in venture capital, if you're not a person that's interested in having an angel investor, if you don't want to scale your business to the point that you need that kind of investment, that's completely fine. Your business is important too. The growth of your business is important too. So don't be discouraged if some of these other funding options don't apply to you. I think a lot of folks are cognizant of the numbers, especially for folks in communities of color, in terms of the lack of angel investing, the lack of venture capital. Those numbers are real, but if you are determined, if you are interested in venture capital and angel investing and private equity options, we can definitely work together with the National Urban League and with Shark Tank and with others around the country to change those numbers for the better. They need to change. There's plenty, again, as I said earlier, I travel around the country and I can definitely tell you that the businesses, the entrepreneurs, the innovation, the ideas, the grit, all of those things are there. Very often the capital is not. And so definitely would love to continue to work with everyone on this webinar to make sure that we change some of those numbers. Last thing. So before we go, I want to talk a little bit with you about pitching. So whether you're pitching to your family during your friends and family round, or you're pitching yourself to a bank, or you're pitching yourself to millions of people for a crowdfunding campaign, or you're pitching yourself to an angel investor or a VC, there's kind of 4 simple pieces to a pitch. I would love to, again, answer questions or follow up with you if you have more questions about this. But just really quickly, the first thing you want to be able to show when you're pitching is that you have a significant amount of passion. You want to make sure that whoever you're pitching to understands the market opportunity, but also understands that you're uniquely qualified, either because this is a problem that you encountered and that you decided to solve, or because of your business background, or because of your expertise or your skill. But you want to show that passion that you have for solving the problem up front. The second piece is you want to simplify whatever it is you're pitching. Now, sometimes businesses, especially tech-based businesses, can be very technical, and it's the technical piece of it that actually creates the market opportunity, that actually creates the investment opportunity, that gets people interested. So definitely don't leave that out, but find a way to translate whatever it is you're pitching into the vernacular that the folks that are hearing you are going to understand. The third piece I say is always make what you're pitching personal. Again, if it's a personal problem that you encountered and now you've found a solution to this problem and you're going to build out that solution, build a business around it, make it personal if you can. And then the last thing is ask. Ask. So make sure that you know what traction means for you and your business. Traction can mean market research. It can be user acquisition. Traction can be sales. It can be revenue. It can be many things. It's different for each business, but figure out whatever traction means for you, be able to articulate that, and then be able to make the ask that you have, whether it's getting financing for your business, whether it's getting an investment in your business, or it's a deal that you're doing with another entrepreneur. Be able to understand what traction means and make that ask confidently. So I want to get to questions here quickly. Just again, follow on social media, check out my website if you'd like to connect with me more. And I will do questions.
Well, Brandon, always something to learn from you every time I hear you speak, so I think that's always a coup. We have lots of questions here, but the first one I want to ask kind of fuses some of the information that you brought up about funding. And so some folks are curious as to, even though you spoke to some of it, but are there any funding sources that you can blend? Like, can you do some crowdfunding and get some friends and family? Or which ones would you mix or not?
Oh, yeah. So many entrepreneurs, especially businesses that have been around for a while, go through all of those options. So they start out bootstrapping, they go to friends and family, they go to their bank and they get a line of credit or a personal loan or a business loan. And then from that point, they start a crowdfunding campaign. They get as much as they can from that campaign, and then they go into angel investing, and then they go into VC. So you can cover all of those. None of them are really mutually exclusive. The only point where you might have an issue is with angel investing and venture capital. So because you're trading equity for those dollars, venture capitalists, if you've watched Shark Tank, all of those guys are venture capitalists. They want as much equity as they can get. They want it to be worth their while. And so if you earlier on in your funding process give out a significant amount of equity to an angel investor or a significant amount of equity to someone during your friends and family round, that might limit your ability to be able to raise money from a VC eventually. However, none of the options are mutually exclusive, and for a lot of businesses, you go through all 5 of those options in your business life. But that's a great question.
No, another great question, and only you can really answer this, is at what stage do you think someone should go to one of the castings or would be, quote unquote, Shark Tank ready? Is it a certain amount of money? Is it the actual product? Is it the service? What is the best combo? Like, who really seems to be winning?
So entrepreneurs that are most competitive for the show have some traction and are ready to scale their businesses. So as I said at the end, when I was talking about pitching, traction means something different for every entrepreneur. It means something different for every business. But whatever traction means for you, you're going to have to show that you have traction, that you have a growth curve that's, up and to the right. And you're going to have to show that you have a plan to scale your business to the point that, one, you need a significant investment from a VC, and two, that you're to the point that you're going to be able to repay, this investment within, generally speaking, 18 to 24 months or so. So that's the general guideline. If you have, a really cool personal store and you have a little bit of pop with your delivery, that's always helpful too. But, generally speaking, it's businesses that have some traction and are ready to scale will do well. We'll be competitive.
Okay. And then if you are a new business, because it seems to be quite a few new business owners or those who are just starting on our call today, how do you determine the equity of your company as a startup without sales and assets as you start determining where you're going to move your business to and what to ask for?
Yeah, so all of that is, and I hate to say this, I'm not trying to avoid the question, but it's really predicated upon your business and where you're at. So if you have market research pointing to the market opportunity, and you add that, and you say, I can take advantage of this segment of the market opportunity with the level of investment that I'm asking this venture capitalist or angel investor for, you can use that as a valuation to say, if I get this money, so a post, investment valuation, I get this money, then I'm going to be able to take advantage of this part of the market, which means that the business is going to be worth this amount if you invest in it. So that's one way of doing it without having significant sales, up front. Another piece of it is thinking about intellectual property. So have you filed for any patents? Do you have a trademark? What is that patent, what is that trademark worth? Have you made any investments in the company yourself, in bootstrapping, in friends and family? What do those dollar figures look like? Adding all of that up and then putting it together into an equation that can mean a valuation for you. But for Shark Tank, just like for VCs in the real world and angel investors in the real world, you don't have to, you can be pre-revenue, you don't have to have revenue to be able to be competitive on the show. Again, you just have to show that you have that traction and that you're ready to scale significantly. So I'm definitely, happy to follow up with whoever had the question about valuation, because it's tricky to answer without knowing all of the background,
Correct.
But there's definitely ways to do it.
Yes, we will share with you directly who asked these questions after, because a lot of them I'm fusing together with a few people so that everyone's questions can be answered. This is a serious group about money. It's all about money here, Brandon, today. So you mentioned about convertible notes, and can you give some more insights into the use of convertible notes as a blended financing option? Because you already touched upon it.
Yeah. So convertible debt is very often a good option for entrepreneurs and for startups who are earlier on in their funding process and who don't want to give up too much equity. So it basically means, for those of you who aren't familiar with it, you go into a meeting with the venture capitalist or with an investor and you say, I'm willing to give you this amount of my company, so a small amount of my company, or sometimes none in terms of equity for venture debt. So for debt, so they give you cash up front, and then once that cash is repaid by the entrepreneur, it turns into a certain amount of equity that is that's presupposed, but kind of in the deal that's in the term sheet. So it's a good option for entrepreneurs who know that they need a significant amount of capital, but who don't want to give up too much equity in the beginning, because if you do, again, it does limit and kind of make the options more difficult if you're trying to raise money in the future. But it's definitely a good option, and it's something that's been used on Shark Tank in the past. So there's a lot of ways to put together a business deal. Not all of those ways translate very well on television in a 6 to 8 minute pitch, and so some of those things aren't very common on Shark Tank. However, convertible debt, venture debt, convertible notes are things that are used fairly often, a couple times each season.
Okay, well, this question I'm going to kind of blend between market research and pitching, because I think you need to have both. You need to have the market research to pitch well, but some basic tips for pitching. There's folks online that have pitched before. They didn't say whether or not they won or didn't win, but want your suggestions of what's really in a good pitch, even though you gave those tips about passion, etc. But how concise, and then how much do you really need to know about the market that you are trying to serve or the industry you're in within that pitch?
So you want to, I guess one, Jody, did they specify, or are they talking about pitching to be on Shark Tank or just pitching in general? There's certainly similarities, but I want to
in general, but I think you can use both. Like if you can compare a regular pitch like the National Urban League Small Business pitch and maybe Black Enterprise pitch and then the Shark Tank pitch.
Yeah, definitely. Well, no problem at all. So anytime you're pitching in a public space, that passion piece is going to be the most important thing. So how you're pitching is going to be more important than what you're pitching. You definitely want to have your numbers down. You definitely don't want to stretch the truth. You definitely want to be efficient with your words, etc. But that passion, that how you're pitching, that does your pitch resonate with the audience? For Black Enterprise, for National Urban League, for Shark Tank, for any public pitch competition that you're doing, and really, if you have, a product that might be in Walmart or Walgreens, and you're doing a product display or something, that passion, being able to connect with those people that are running around in Walmart looking for soap, and you're trying to sell them a new, Clorox bleach alternative or something. That passion is going to be really important for your pitch. In terms of knowing your network, knowing the market opportunity, you should be an expert, or at least be able to speak as if you're an expert in whatever market that you're in. So no, you don't have to know all of the ins and outs of your market, but you want to know as much as you can know, and you want to know game plan wise, what kind of questions might I get based on the pitch, based on the information that I'm sharing. And can I, as the leader of this business, as the person that's wanting some kind of investment, that's wanting to win this prize, can I respond effectively to the questions that I might get? So it's, less about being a savant in whatever market that you're in, and more so about, can I respond to these questions that other entrepreneurs might ask me, or that investors might ask me. In terms of knowing your numbers, yes. So there's no excuse, I think. There's no reason why an entrepreneur shouldn't know his or her numbers when you're pitching your business. It's your business. No one should know the business better than you do. And I definitely understand. I get the issue of entrepreneurs being so busy running their businesses that they're too busy to know their business the way that they're supposed to know it, that they're too busy to know numbers the way that they're supposed to know it. Well, doing a big pitch competition, whether it's Black Enterprise or National Urban League or coming to a Shark Tank casting call, that's an inflection point for you. That's an opportunity for you to sit down with your accountant, sit down with your sales team if you have one, or just sit down with yourself if you're still a small business and you're a single entrepreneur, and get to know your business, get to know your numbers in the way that you should absolutely know them. If you don't know your numbers, you could do one of two things when you're pitching. One, you could exaggerate and potentially win something off false pretenses, and then have a tough conversation with an investor as they're doing due diligence on your business. Or you could miss out on being able to sell yourself in a really compelling way because you choose to leave out some of the numbers, or you aren't able to respond to some of the questions. So definitely you have to know your numbers. In terms of, again, knowing the market, it's more so about understanding what kind of questions you might get and being able to respond to those. Generally speaking, though, judges at these competitions are going to assume you're an expert. So something I usually say at our casting calls is, if you tell me today that oranges are healthier than apples, then I'm going to believe you that oranges are healthier than apples. Now, if after you pitch me, go on Google and look it up, and it comes out that apples are healthier than oranges, then we're going to have a conversation about that. However, generally speaking, judges at pitch competitions, although they may have subject matter expertise, they're going to assume that you're an expert, and unless you say something that's completely outrageous, you're going to get the benefit of the doubt.
Gotcha. Well, the last couple of questions, you just need to sum up they're all Shark Tank questions.
Okay.
So one is, and I know you don't usually reveal until you get closer to the date, but if you could give up any of the upcoming casting dates and cities. And then secondly, there are a few people who have tried to apply, and they said part of the application or what's online is not working, so is there some other way to get the information? And lastly, just for fun, this came from Marion Dessou, who's your favorite shark?
Cool. Yeah, so definitely appreciate all of those questions. So number one, if anyone's interested in applying to be on season 9 of Shark Tank, we're currently casting. Casting season is roughly March through July. Casting calls are listed on SharkTankDiversityTour.com. And so all the cities that we're going to for 2017, at least everything that we've scheduled so far, is listed on SharkTankDiversityTour.com. As far as upcoming dates, we are going to do a casting call in the New York area, a half day in Harlem at Uncharted Play, and a half day in Brownsville and Brooklyn at the Dream Big Foundation there on April 19th. On April 28th, we'll be in Charlotte, North Carolina at Johnson C. Smith University for an all-day casting call, I think 9 a.m. to 5 p.m. And then after that, we will be in Detroit, Michigan on May 6th. And again, all of these cities are listed on our SharkTankDiversityTour.com website. And then the last one that we have scheduled for right now is Houston at the Black Enterprise Summit on May 20th. So we'll be in Houston, Texas, and definitely hope that folks here on the webinar and other folks that are in these areas will come out to the casting calls and pitch. The casting calls are really fun. Mr. Wonderful isn't going to be there to say that you're dead to him. They're really constructive. We give good feedback. We also do pitch prep sessions at the casting calls. We usually have an access to capital panel discussion to talk about local funding options. I usually have the SBA or the MBDA come in and share their resources with the entrepreneurs. So they really end up being good opportunities, I think, for the entrepreneurs, whether or not they move forward with the show. However, we definitely want to move as many people at the casting calls forward to the next step in the process as possible. So those are our casting calls right now. We will have more casting calls over the summer, but to your point, Jody, we don't usually schedule them more than about a month or so out. Next question. If you've tried to register online but you've had a problem, I think shared my contact information with questions. So if you'll tweet at me, or if you'll go to SharkTankDiversityTour.com and there's a contact page, send me a message there, and we'll make sure to get it squared away. And then last thing, favorite shark, it's probably between Barbara Corcoran and Damon John. Barbara Corcoran, I think, puts a lot of time into the companies and into the people that she invests in. She very often invest in people versus investing in the product or investing in the idea. One of my favorite businesses, Piper Y, was invested in by Barbara Corcoran a couple of seasons ago, and they're doing really well. And she's just really fun in person. I don't feel like her whole personality always comes out on the air. She's really funny. And then, Damon's just cool. I love hanging out with him. And was really excited by his new haircut that he had for season 8. So those are my 2 favorites.
Great. Well, I think you've been fabulous. I do want to put in a plug and a hopeful plug that one of your castings will be at the National Urban League Small Business Summit in St. Louis in July. Maybe we'll be the closeout. And we have coming up after you today, as you see on the screen, the rest of the Entrepreneurship series, which will be standing on your shoulders. Next, we'll be talking about what you were speaking about, storytelling, your marketing, the value, how do you stand out? How does your business become stronger and bolder? There's 8,000 kinds of chocolate chip cookies. Why is yours better? Why am I going to buy yours, right? And then following that up with, as much as an entrepreneur might be an expert, we have all failed at something or another, so we're going to hear about how much you can find success in failure. So your tip about every Sunday writing solutions to your problem is key to that. And then ending it up with 2 CEOs, although one is only listed here, Gwen Jameer and also Jessica Johnson, who have had their businesses for a while. So how do you keep going? How do you stay fresh? How do you continue to get funding? How do you bring in new customers and clients? So we're going to grow this entrepreneurship series after you and make sure that we are ready to roll for the Small Business Matters Summit and the National Conference for the Digital Career Success Series. So thank you so much for joining us today. And everyone else who's on the line, please join us in St. Louis. If you cannot make it, please at least upload your ideas to Small Business Matters and or to the Urban League's Job Network. If you are looking for a job, put your resume up there. And please join us in St. Louis for our next Small Business Matters Entrepreneurs Summit. Brandon hopefully will still be with us. And we look forward to seeing you again. And hopefully I'll catch you while you're in New York, probably Harlem before Brownsville.
Yeah, definitely. And definitely, again, kudos to the National Urban League and the Urban League Jobs Network for putting this together. Thank you for the work that you're doing, supporting young professionals, supporting entrepreneurship, and, of course, supporting the community. Definitely, I'm always proud to partner with you, always proud to work with you, and looking forward to continuing to work together in the future.
Thank you so much. Have a great afternoon, everyone.